Good morning and welcome to the Five with Fitz. I'm Keith Fitz-Gerald. Thanks as always for watching. And as always, I hope you're having a great start wherever this finds you. The days are too short not to smile and enjoy them. The Dow has had one of its best days in a long time yesterday, as did the rest of the markets. Oil's back this morning at about $100 and inflation held at 3% according to the Ministry of Whitewash, better known as the Commerce Department. Chances are you know enough about all that stuff already. That's why I want to have a very straightforward conversation about what I believe is one of the single best, most undervalued companies on the planet, Palantir. Yeah, I know. It's controversial as heck right now. The market shot higher yesterday, but Palantir dropped, and that prompted many investors to ask why that's happening. There's a short answer and a perfectly logical one. His Excellency, Michael Big Shortimus Maximus Burry, struck again, posting a little ditty comparing Palantir to Anthropic, saying the latter was eating the former's lunch. But here's the problem with that argument and why it shouldn't change a thing, in my humble opinion. Anthropic and Palantir are not competitors. Heck, they don't even play the same sport. Anthropic builds AI models. Palantir builds secure, mission-critical operating infrastructure that governments and enterprises use to actually deploy AI at scale. The kind of platform where the data is classified, the stakes are existential, and cheaper and easier isn't just irrelevant, it's disqualifying. Saying Anthropic is eating Palantir's lunch is like saying Netflix is eating Cisco's lunch because both of them use the internet. I mean, really? Anyway, I've been bullish on Palantir, as you probably know, since it was trading in the single digits and long before Wall Street took it seriously. Heck, long before they could even spell it, half of them. What? I recall getting on more than one occasion in various television interviews, green rooms, etc. I mean, during that time, Palantir's revenue has increased by nearly 309% and $3.38 billion. During that time, the customer count has increased by roughly 663%. During that time, the government contract backlog has jumped 91.3% to $4.4 billion, folks. During that time, the commercial business has grown by 314% and $1.57 billion. And finally, its AI platform, AIP, is being deployed around the world by some of the most demanding, security-conscious organizations on the planet with the highest stakes environments you can imagine. Examples include Operation Absolute Resolve, the precision U.S. military raid that pulled Nicolas Maduro out of Venezuela in January. Tampa General Hospital, where AIP has slashed patient placement time by 83% and cut the average sepsis stay by 30%. And HD Hyundai, one of the world's largest shipbuilders, which now building ships roughly 30% faster after embedding Palantir across its entire Korean industrial empire, from refinery operations to unmanned naval vessels. Now, none of that was in Burry's post, which, by the way, in classic Burry form, has since been deleted, apparently. Now, here's what I want you to remember about Burry, no matter how you feel about it. He is a smart guy who made an extraordinarily brilliant call nearly 20 years ago. But that was followed by a trail of almost, not quites, and oops, never minds. He regularly deletes posts. He shut his fund down. This is the same Michael Burry who warned of, quote, the mother of all crashes and posted sell, then later admitted he was wrong, blasted the GameStop frenzy after profiting from it early, and repeatedly disappeared from social media after stirring panic. Now, he's warning again about the AI bubble while the company's actually building AI. You know the names we talk about all the time, with real revenue, real customers, and so much demand they can't secure enough compute power, are scaling like crazy. Now, Burry openly set up short, meaning that he has bets in place that this stock declines. So trash talking Palantir means he stands to benefit from it if it goes down. Now, I don't know if that's still true, but it certainly begs the question. There's a video that I want you to watch. You've probably seen it. If you haven't, you can click on a link in the written version of the Five with Fitz. It's with CNBC personality Jim Cramer talking about how stocks like this take a jump or take a dive. And see if you don't find a few parallels between what he explains on the video and Burry's actions now. So the question obviously on the minds of many is, so now what? Well, that's up to you, of course. It's your money and your responsibility. My 2 cents is that stocks like Palantir come along once in a blue moon, and your job as an investor is the same as mine, to find them as early as you can, then latch on for as long as you can. It's going to be tough. It's going to be volatile. And I've made the remark more than once that Palantir is one of the most challenging stocks you can possibly own, especially now that it's dipped back, into the 150s, 140s even, well below the 200 something dollars it touched recently. Personally, I hope I'm smart enough to buy more shares, and I am not alone. The patient money, meaning sovereign wealth funds, major institutions, long-term holders, sees exactly what I see in Palantir: a strategic AI and data platform with growing defense, enterprise, and government contracts, one that's growing at double and triple digits. Institutional ownership is now at 57.86%, according to the NASDAQ official institutional holdings. So sure, Burry's bearish take grabs headlines and it spooks the nervous money into panic selling. But that, my friends, is also the opportunity here for smart investors. So Keith's investing tip in this department: doom inevitably sells at moments in time, while smart investors know that profits always scale over time. And there's a big difference. 3 guesses, in fact, which one is the better outcome, and the first 2 don't count. Oh, and one other thing today while we're at it. This came across my desk yesterday, and I want to talk to you about it because it's real. A warning to all 2 billion iPhone users: your bank account could vanish in seconds. Now, I hadn't planned on writing about this today, but I'm going to anyway, or speaking about it today anyway. I had heard yesterday that there's a new scam out there designed to trick people into authorizing payments themselves, which makes it nearly impossible to recover stolen money once it's sent. Criminals are apparently sending fake Apple Pay fraud alerts via text message to lure unsuspecting victims into believing there's a problem with their account, a purchase attempt, or something else, prompting immediate action. Do not click on any link in the message, and do not call whatever number is included. I've already received several of these messages, in fact, and this is 24 hours. The included links connect to scammers posing as official investigators who convince victims to withdraw or transfer money. Now, there's 2 things that you want to think about here. Number 1, digital scams are spread because they are designed to A, exploit your trust in Apple in this case, and B, act quickly via digital payments, which you can't recall because you authorize them. The single most important defense in a situation like this is to slow things down. And I want you to seriously consider signing up for a newly launched first-of-its-kind program called the Ultimate Scam Protection, created by my dear friend and financial expert extraordinaire, Susie Orman. And again, to be clear, I do not receive 1 red cent for saying all this. Protecting your wealth right now is simply that important. Fraud is on the rise, and stories like this are proof positive that it's more dangerous than ever if you're out there with your money. Now, if you're on the fence or you're thinking this can't happen to me, I get it. That's what a lot of folks think before they get taken, right up until the point when they get taken. So please do yourself a favor and your money a favor and tune into her podcast today. There's a link in the written 5 with Fitz. Tune into her podcast and listen. Then be sure you have the very best cybersecurity stocks in your portfolio. My fave has returned 219% over the past 3 years, while the S&P 500 has turned in 64% over the same time period. Chaos and cybercrime create opportunity, albeit for all the wrong reasons, but it's opportunity nonetheless. So, Keith's investing tip: you can build all the wealth you want, but it won't amount to a hill of beans if you don't protect it. And as always, I will be here if you need me, by the way. And finally, today's bottom line: my rule of the back page applies in spades today. The biggest, best, and potentially most profitable stories are almost always found on the back page, where very few people are reading along. You got this, I promise. Thanks for watching. And as always, let's get out there and make it a great day. See you tomorrow.